Wall Street closes mixed as rising yields weigh on equities, while Meta plunges 15% in extended trade on a weak guidance. Stocks in the Asia Pacific have opened weak, while the GIFT Nifty is indicating a muted start for the Indian markets. Crude prices remain range-bound, with Brent trading around $87 a barrel as geopolitical worries continue to ease. Gold, too, remains little changed, around $2,300 an ounce ahead of the key economic data in the United States. The Reserve Bank of India bars Kotak Mahindra Bank from onboarding new customers through its digital platforms, also restricts the bank from issuing new credit cards. The RBI says the action follows continued failure to address concerns over the bank's IT systems. Axis Bank beats estimates on all parameters in the fourth quarter. Profits rise nearly 30%, while revenue grows 17%. Margins expand by 160 basis points, and asset quality also improves, while Hindustan Unilever meets muted estimates in the fourth quarter, even as revenue and profits decline, while LTIMindtree delivers a weak quarter with revenue and margins coming in below estimates. The margins too contract on a sequential basis. And in key earnings to track today, Hindustan Bank is expected to report its slowest profit growth in 13 quarters. Bajaj Finance's net interest margin is likely to contract in the fourth quarter as well. Nestle's volume growth is likely to be between 4 to 6%, while margins may also expand. Good morning. It's Thursday. It's the monthly options expiry, and in the Mumbai News Center, I am Hormuz Fatakia bringing to you Power Breakfast on CNBC TV 18. Let's first up take a look at how the Asian markets have opened this morning. And after a strong rally all through the week, the Asian markets are taking a bit of a breather this morning. The Taiwanese index is down over 1% as we speak. The Seng is also down 0.5%. The Japanese indices are also trading with losses this morning. The South Korean GDP data came out this morning, and that was a beat on expectations as the country's GDP expanded the most since 2021, but yet the markets over there are not trading very well. They're trading with losses. The bigger news, though, is coming in from Japan, and that is where the yen has slipped to levels of 155 against the US dollar, and that is the lowest since 1990, and that has further fueled risk of an intervention from the Bank of Japan, who begins their two-day policy meet today. Remember, the decision will be announced later tomorrow, so we'll keep an eye out on all of these cues emerging from Asia. The GIFT Nifty is also indicating a slightly muted start for our own markets. Remember, the Nifty has gained for 4 days in a row. The implied open is now pointing to a 60-point downtick on the Nifty at the start of trade. So we'll keep an eye out on all of these cues. But from Asia to the United States, now it was a mixed day of trade on Wall Street. The benchmark indices over there, all of them ending flat. The Dow Jones ending just below the flat line, while the S&P 500 and the Nasdaq managed minor gains. The equities, though, were under pressure following a rise in yields. Both the US 10-year and the 2-year rose on Wednesday, while shares of Tesla extended gains and rose another 12% after CEO Elon Musk announced a renewed push into affordable electric vehicles. However, shares of Meta plunged in extended trading following weak revenue guidance despite posting a better than expected first quarter result. The stock sell-off accelerated early in the earnings call when CEO Mark Zuckerberg began discussing investments where the company makes no money. Tech will remain in focus ahead of Google and Microsoft's numbers due later today, so we'll keep an eye out on all of these cues as well. But let's get you some important opinion on everything, ranging from the Fed, the rate trajectory, the market setup, and much more from a host of experts from Wall Street. Listen.
The market needs certainty. I don't know if it needs cuts, or it wants certainty, I should say. So no matter what's happening, I think that's the more important issue. So I won't say whether or not I think it needs it at this point. We've still got time, too. Who knows what's going to happen between now and June? I think the harder challenge is deciding what to do when you don't know what's coming. Actually, I have a paper coming out in a little bit that talks about if you had perfect foresight into certain economic data, which things would you want to know? And none of the things I list are a quarter point here or there. It's more like, where do you think we are a year from now?
I think this most recent durable goods number is consistent with a resilient economy. And I think the overarching narrative in my mind is we have historically restrictive monetary policy being blunted to a great extent by historically stimulative fiscal policy. Unspent American Rescue Act money still being spent, Inflation Reduction Act projects, Infrastructure Act projects, and the conflict between those two has meant that particularly the services sector, inflation in the service sector has been stickier. Goods are disinflating. That's being helped by China overcapacity and particularly global overcapacity. But services, particularly labor, is where ground zero is of this inflation issue. And if I'm at the Fed, I think what they're thinking is we're at full employment and they can afford to be patient, and they do not want to make a mistake by beginning rate cuts and then having a resurgence of inflation, particularly in the service sector. So they're going to wait, and I think they're going to push back expectations for a rate cut and leave their options open.
The U.S. economy is doing quite well. And so it's not clear that it requires stimulus. I mean, today's Fed funds rate of 5.25, 5.5 is a little bit of an emergency measure designed to cool off the economy and inflation. One of these days we'll declare victory against inflation, and the Fed will take rates down to something moderate and sustainable. I think that's in the threes. But I think that, from the period 09 through 21, the Fed funds rate averaged 0.5%, and it was zero most of the time. I think that interest rates should most of the time be set by the free market. That is to say, the negotiations between borrowers and lenders, as opposed to having a central bank tell people what the rate should be. So I hope we're going back to that climate.
And that's all the global market action from Wall Street. But how will all of these overnight cues impact the Indian markets? We have our research team joining in with the Power Prep segment and how the trade setup looks like, the stocks that you need to keep an eye out for, and the FNO setup as well. First up, Ekta joins us with all the market cues. Morning, Ekta. What are you picking up this morning? We had a bit of a consolidation for the last 2 days.
Morning, Hormuz. Well, like you mentioned, the markets gained for the fourth straight day. The Nifty is at 22,400. Advanced decline ratio was positive in yesterday's trading session as well. For today, it seems as though global markets are quiet. You alluded to that, and I'll get to that in just a bit. But it seems as though stock-specific action, domestic cues will be top of mind. I think Kotak and the reaction to the RBI news last evening will be top of mind for the markets this morning. We also had post-market numbers from Axis Bank, where the gross NPA was the lowest in 34 quarters, so that might negate some of the negatives from Kotak. A lot of post-market results, so HUL, AU Small Finance Bank, LTI, Mindtree, Macrotech, Syngene, all of these companies will be reacting to their numbers. And we have a heavy day in terms of numbers as well. ACC, IndusInd Bank, Bajaj Finance, L&T Tech Services, TechM, Nestle, Emphasis, just to name a few. And along with that, we have April expiry. So it's a whole mix in terms of domestic cues, not to mention phase 2 polling also begins on the 26th of April. So the markets will keep an eye in terms of what's taking place when it comes to elections. Global cues, US close mix. Meta was the big headline post markets. Asia largely sluggish. The Bank of Japan monetary policy begins today. Oil is range bound, so that's a positive. Gift Nifty indicating maybe a bit of a consolidatory start for us, considering the 4-day rally that we've seen. US jobless claims plus GDP data will be something from the US we'll watch out for, and the US personal consumption expenditure index, which comes out tomorrow. So I think all of these data points will be important to assess what the Fed is probably going to do going forward.
An earnings heavy day indeed, and earnings season has just begun. Thanks a lot, Ekta, for joining in. Over to Sudarshan now. List up the stocks that you need to watch out for this morning. Sudarshan, good morning.
Morning, Humar. So Kotak Bank is the latest financial institution to face RBI's action. RBI has asked Kotak Mahindra Bank to stop issuing fresh credit cards and also asked not to onboard new customers via online and mobile banking. And these actions are based on concerns following IT examination for years 2022 and 2023. Kotak Mahindra Bank later says it has taken measures for adoption of new technologies to strengthen its IT systems and will continue to work with RBI to swiftly resolve account balance issues at the earliest. Coming to earnings, Axis Bank has reported healthy Q4. Asset quality has improved. NPAs are lowest in nearly 3 years. NIM has improved versus expectation of a decline. It's up 5 bips to 4.06% sequentially. NII and profit are higher than estimates as well. HUL results are in line with muted expectations. Revenue is flat. EBITDA is down 1% year-on-year. Volume growth has come in at 2% versus poll of 2 to 3%. LTI Mindtree, revenue and margin lower than estimates. Constant currency revenue has declined 1.3% versus estimate of 0.8% decline. Margin has come in at 14.7% versus estimate of 15.1%, and margin has declined for third consecutive quarter. Company says will return to growth in Q1 FY25 as Q4 was a one-off quarter. AU Small Finance Bank, NIM is at a 15-quarter low of 5.1%. NI has come below estimate at rupees 1,337 crore. Profit is higher versus estimate, but it's aided by other income. Oracle Finance, revenue is up 11.7%. EBIT margin has come in at 44.7% versus 44.3%. And as per RIMA, normal quarter is a normal quarter after the blockbuster Q3. Indian Hotels, strong earnings continue. It has reported best Q4 ever. Revenue is up 17%. Margin has risen nearly 200 bips year-on-year. MS Fin, strong earnings. NI is up 39%. Operating profit has increased 27% year-on-year. Syngene, operating earnings have improved in Q4. Margin has risen 300 bips to 34.6% year-on-year.
Plenty of stocks to watch out for this morning. Thanks a lot, Sudarshan, for joining in. And lastly, Nigel joins in with the FNO update this morning. Nigel, it's the monthly expiry today. What is the FNO setup looking like?
Well, that's right. It's a monthly expiry. But if you look at it, rollover action is still a little bit lower than what we've seen on an average in the past. So plenty of action does still hold in this series itself. What are the FIs doing yesterday's trading session? Well, they unbound some long closure on 30,000 contracts. Did get unbound. And that's why, in fact, we did see that the short positioning has now moved to around 69%. Not just that, if you look at it in absolute terms, it's clocked 1.25 lakh contracts. Now, that's the highest we've seen in the last 4 months or thereabouts, close to around 4.5 months or thereabouts. So that the last time we saw this sort of short edition, well, it was, short positioning by the FIs. It was in November 2023. So keep that in mind. Options data on the Nifty. Let's pull that up for you on the screen. Two strikes are very active. 22,500 call, 22,400 put. So those put writers, the premium ended at around 55 rupees. But on an average, it could have been around 70 to around 80 rupees odd. So for those put writers, their stop loss comes in at around 22,320 approximately. So that's the first reference point you should see on the downside. In terms of the 50 DMA, well, that's the crucial mark, 22,200. We've been highlighting this point, right? 22,150, 22,200. That's going to be important on the downside. Resistance comes up for you on the screen. On the Nifty Bank, that's going to be very, very exciting today because you have Kotak Mahindra Bank that will pull back. It could be quite a large pullback out there. So I've given the reference points. We ended on the 20 DMA. The 50 DMA is the first reference point on the downside, and on the upside, 48,500. GIFT 50 suggests a bit of a pullback. Let's see where we go from there. 65-point pullback. As I said, the first reference point will be 22,320. Back to you.
Plenty interesting levels to watch out for, Nigel. Thanks a lot for joining in. And time for a short break here on Power Breakfast. When we return, the Reserve Bank of India has barred Kotak Mahindra Bank from onboarding new customers through its digital platforms and issuing new credit cards. More on that on the other side. Stay tuned. Back with us here on Power Breakfast, and the big news coming in from yesterday evening. The Reserve Bank of India has barred Kotak Mahindra Bank from onboarding new customers through its online and mobile banking channels and from issuing fresh credit cards as well. The action comes after the central bank cited concerns over the private lenders' compliance and risk management practices. Ritu Singh joins us with all the details. Ritu, what does this mean for Kotak Mahindra Bank now?
Well, tough action on Kotak Mahindra Bank, and one that is reminiscent of what happened in the case of HDFC Bank in 2020. RBI has directed Kotak Mahindra Bank to stop onboarding new customers through its online and mobile banking channels and also stop issuing fresh credit cards. The existing customers don't get impacted, but the bank cannot add any new customers digitally. Now, RBI said these actions were necessitated based on significant concerns arising from the IT examination of the bank for the years 2022 and 2023 and the continued failure on the part of the bank to address these concerns comprehensively and in a timely manner. There were serious deficiencies RBI observed and non-compliances in IT inventory management, user access management, data security, business continuity plans and so on. And the compliances submitted by the bank it found to be either inadequate, incorrect or not sustainable. Now, because of these IT issues, Kotak Mahindra Bank's online and digital banking channels suffered frequent and significant outages in the last 2 years, the recent one being the service disruption as early as the 15th of April itself, resulting in some serious customer inconveniences. The other concern RBI highlighted was the rapid growth in the volume of the bank's digital transactions of late, including transactions pertaining to credit cards, which was building further load on the IT systems. Now, RBI said it has been engaging in continuous high-level talks with the bank on all of these concerns for the last 2 years, and yet the outcome has been far from satisfactory, resulting in the action from RBI. However, restrictions will be reviewed after an external audit and remediation of the deficiencies to the satisfaction of the Reserve Bank. Now, remember, Kotak has a new CEO, Ashok Vaswani, barely a few months into the job, and this is going to be trial by fire for him. Digital has been a key focus area of the bank, and credit card is a high margin business. So if these restrictions stay on for too long, it could hurt the bank. If you recall, HDFC Bank was also placed under similar restrictions because of similar IT issues just a few months after Shashidhar Jagdishan had taken over as the CEO. In their case, it took nearly 15 months for all of the restrictions to be lifted. For Kotak Mahindra Bank, we'll have to see.
Thanks a lot, Ritu, for joining in. And in fact, Kotak Mahindra Bank released a statement on the issue, and the bank has promised to continue working with the RBI to swiftly resolve the balance issues at the earliest, and has taken measures to adopt new technologies to strengthen their IT systems. The bank has also reassured the existing customers that they will continue to have uninterrupted services. And let's focus on some important earnings that were reported after market hours yesterday. Hindustan Unilever's fourth quarter results were in line with muted street expectations. However, the revenue and profit saw a decline on a year-on-year basis. Manglam now joins in with the earnings fine print. Manglam, good morning.
Good morning. So Hindustan Unilever reported in-line set of numbers this time around, but that's not saying too much, largely because not much was expected from the street this time around as well. So revenues largely as expected, around 14,850 crores with 2% volume growth, EBITDA around 3430 crores, and the net profit coming in at little over 2,400 crores. Not very different from what the street was expecting. It was the segments, where beauty and personal care actually saw a revenue decline of about 3% as against expectations of 1 to 2% growth, whereas it was food and refreshments which grew 3% as against expectations of just 1%, which led to the overall numbers being largely in line with street expectations. Gross margins, that increased by about 316 basis points, but that was, not reflected in the EBITDA margins, which actually declined by 20 basis points. Why is that? Because one, the company spent 200 basis points more on advertisements. The deal that expired with GSK took about 60 basis points off, and the higher royalty that they pay to the parent took about 35 to 40 basis points off as well. What did the management say? They said they're seeing gradual recovery in rural, whereas premium, urban and modern trade channels continue to do well for them. They expect low single-digit price decline in the near term because raw materials are benign, so they'll obviously try to push for volumes, and volume growth may see some recovery beyond this 2-3% channel that the company has been reporting for the last few quarters. They will maintain EBITDA margins at current levels even while spending on advertising and increased royalty expenses, etc. as well. Importantly, the stock has done virtually nothing since pre-pandemic levels and currently trading at 46 times. So on these in-line muted numbers, do people sell the stock? Perhaps not, but no triggers for buying the stock as well. So chances are that it may remain in this range.
It may remain in this range. Thanks a lot, Manglam, for joining in with the fine print for HUL's results. And in fact, let us also listen in to what Ritesh Tiwari, the CFO of HUL, had to say about the recovery in rural demand. Listen in.
The way we see in rural, we had spoken about that rural usually is always accretive to FMCG demand. And we had seen that was an area of overall business which had seen in macroeconomics, given the amount of cumulative inflation and the demand outlook, we've seen a purge of disposable income. And hence we've seen rural demand coming off. That we started to see gradual recovery as we had expected. Is it playing the role of being accretive to FMCG? Answer is no. But is it improving sequentially? Answer is yes.
From HUL, we move to Axis Bank, which also reported its fourth quarter numbers. Abhishek is here to tell us more. Abhishek, good morning. How are the numbers looking like?
Hamas, it's a beautiful quarter, or at least Q4 FY24 for Axis Bank. Records galore over there. Take a look. Gross NPA ratio is the lowest in last 34 quarters. Net NPA ratio is the lowest in last 35 quarters. A restructured book is the lowest in last 14 quarters, coming in at 0.16 of the loans. Now, net interest margin was largely expected to decline as per analyst estimates, anywhere between 8 to 10 basis points sequentially. However, surprisingly, despite the decline in CD ratio or credit deposit ratio, the net interest margin has actually improved. So net interest margin overall has improved by 5 basis points. This is largely driven by the domestic net interest margin, which has actually improved by 8 basis points on a sequential basis. ROA, or return on asset, has touched 2% for the first time that I am seeing in last 9 years or even more. ROE has touched more than 20% for the first time that I am seeing in last 9 years or even more. So take a look at the annualized slippage ratio. Now, slippages were expected to rise as per analyst estimate on a sequential basis, anywhere between 3,750 to 4,300 crore, but it has come in at a little more than 3,400 crores. So the annualized slippage ratio is one of the lowest in last 14 quarters. CASA ratio has improved for the first time in last 4 quarters, and CASA per branch has also improved for the first time in last 3 quarters. In terms of the PNL, both the NII and PAT is a beat on our poll, although the fact that, PAT was also aided by other income. Back to you.
Thanks a lot, Abhishek. And we'll keep an eye out for Axis versus Kotak panning out this morning. But let's slip into a short break now. Up next, we get you cues from the commodities market. Stay tuned. We'll be right back. You're watching Power Breakfast with us on CNBC TV 18, and as promised, Manisha Gupta now joins in with all the updates from the commodity space. Good morning, Manisha. What are you picking up this morning?
Hi, Hormuz. I'm looking at the crude oil prices because we are holding around $88 a barrel yet again. Well, the decline in US dollar definitely has done its bit, but the markets are now waiting for the US GDP and the PCE data for inflation and rate cut cues from the US. In the meanwhile, the street is also looking at a very big draw in the U.S. inventories to the tune of almost 6.4 million barrels, and that has been supportive. But then again, there is low expectation of military escalation between Iran and Israel, and the oil tankers which were held idle at Red Sea are now progressing in deliveries. So the markets are faced with contradicting fundamentals here. But when it comes to the metals as a sector, we still are looking at good cues from this one. The copper continues to hold around 2-year highs. Iron ore has rebounded to a 6-week highs. You have aluminum prices trading at 15-month highs, zinc holding at a 1-year highs. So the metal prices, yet another week where they would be closing in the positive.
Thanks a lot, Manisha, for all the cues from the commodity space. But with that, it's a wrap on this edition of Power Breakfast. Bazaar Morning Call takes the action forward. From myself and the team that put this show together, thank you so much for watching.